Stock swings between losses and gains in a subdued trade amid signs of slowing growth and uncertainty over Trump 2.0 policies. Realty and consumer durables climb while utilities and financials drag. Mid-caps eke out gains. India's Q2 GDP growth drops to a shocking 5.4%, way below the estimated 6.5%, fueling expectations of RBI easing liquidity, even as high prices may push back a rate cut to February. Two-wheeler wholesalers saw some growth in November, led mostly by exports, but passenger vehicles, barring SUVs, tractors and CVs, remained in the slow lane. Meanwhile, the legacy players narrowed the sales gap with Ola Electric in the EV two-wheeler segment. Adani Group Chairman Gautam Adani breaks his silence on his indictment by the US District Court on misrepresentation related to the bribery in India, saying no one from the Adani Group has been charged with the FCPA violation, and reaffirms the group's commitment to regulatory compliance. The Insurance Amendment Bill proposes an open architecture for insurance agents, permitting them to offer products from more than one insurer in insurance categories. The move could hurt LIC, the top agent-driven insurer. Hello, good afternoon. You've tuned into Business Lunch on CNBC-TV18 and I'm Vinny Motiwala. A quick look at what the market is doing. A very subdued day of trade. Nothing much excitement that we're seeing coming in, though, yes, recovered from the day's lowest point, near the day's highest point. But the 24,000, 24,200 is where the range is, where the Nifty is moving at today. As of now, 24,177 is what the Nifty is holding on to. 0.2% of gain is what we're seeing for the Nifty. Sensex 2 is holding on to gains. But broader markets, let's pull that up because there's a bit of an outperformance coming in today from the broader markets. So look at the Nifty mid-cap on the Nifty small-cap. Both of them are holding on to gains of around 0.6%. Small-cap also holding on to gains in that range as well. 0.8% of gain is what we are seeing for the Nifty small-cap. Nifty Bank, that was under pressure the last time I checked as well. Is that recovering? Let's pull the chart up and look at that. No, it's remained in that range. Not much of a recovery there. Yes, 51,855 is what the Nifty Bank is at, down 0.4% in trade. Pressure coming in from IndusInd Bank, HDFC Bank, and some of the names for the Nifty Bank that we're seeing some bit of an impact coming in on. Cement stocks, they are buzzing in trade. Today we have Grasim, JK Cement, UltraTech Cement, or even something like a Shree Cement. All these stocks are managing to hold on to very good trends. So yes, keep an eye out on that. And a lot of news flow driven stocks that we have: Dixon Tech, Biocon, Cochin Shipyard, and Greaves Cotton is what we're watching out for. But other than that, we have the auto sector that's been in focus as well. Why? Auto sales numbers that have come out. They posted a mixed sales number coming in for the month of November. Two-wheeler wholesale saw some growth led by exports, while passenger vehicles saw a decline in sales. Now, Sudarshan is joining in with us to give us a lowdown on what is happening in the auto sales numbers. Sudarshan, good afternoon.
Afternoon, Vinny. So mixed trend is emerging from the auto sales front for the month of November for two-wheelers. Export segment has led the growth, while on domestic front, sales have come largely lower than estimates. For passenger vehicle, SUV segment has led the growth, and as far as commercial vehicle is concerned, overall sales were muted. So starting with Maruti, sales were a minor beat to our estimates, led by SUV segment. The segment was up 20%, while compact segment sales were down 5%. So overall sales were up more than 10%. Talking about TVS Motor, numbers were better than estimates, led by exports and electric vehicles. Total sales were up 10%. Electric vehicle sales have increased 57%, and exports have risen 25% year on year. Coming to Bajaj Auto, sales were almost in line with estimate. Here also, exports have helped the company to report sales inline sales, and EV sales have jumped sharply year on year. For the month of November, electric vehicle sales were up almost 120%. Even market share has increased to 22%. Total sales were up 5%. Domestic sales were down 7%, and exports here have increased 24%. For M&M, auto segment was led by SUVs like Maruti. Total auto sales were up 12%, and SUV sales have increased 16%. In the tractor segment, sales for the month of November was slightly below estimates, but outlook was healthy. Company says good Rabi crop expected to further boost demand in the coming months. Total tractor sales were up 2% for the month of November. Coming to Ashok Leyland, sales were a mild miss to estimates. Total sales were up 1% and total commercial vehicle sales were down 11% year on year. Now, Ola Electric is also in the focus. Vahan registration data for the month of November indicates a sharp drop in the market share of the company. For the month of November, market share against October 2024 has dropped 500 basis points. Now, its market share stands at 25%. And which companies are the gainers? Gainers are TVS Motor and Bajaj Auto. For TVS Motor, current market share is 23%, which is up 100 basis points against October. And for Bajaj Auto, market share now stands at 22%. It's up 200 basis points month on month. So overall, for the auto sales, it's a mixed picture for the month of November.
Thank you so much for that, Sudarshan. And let's move on. In a confirmed news break, Aster DM Healthcare has announced a merger with the Care Hospitals. Now, the deal will see shareholders of Care Hospital get 977 shares of Aster for every 1,000 shares held, and the merger will result in an entity that will be one of the India's top 3 hospital chains in terms of revenue and bed capacity. Earlier on, we spoke to Alicia Mopen, who is the Deputy Managing Director at Aster DM Healthcare, who says that the merger will be EPS accretive. Listen in.
When we look at our margins right now, EBITDA margins around 17%, it actually moves up to 19% in a post-merge scenario. So, which is why, exactly like you said, it's EPS accretive from day one. This merger, it values the entire deal at more than $5 billion. So we believe that this is one of the largest healthcare transactions this year. So we should be able to see the additional 10 to 15% EBITDA margin expansion, maybe in sort of 2 years. 24 months to 36 months is when you really start unlocking those synergistic opportunities, to be honest. Aster has been outperforming its peers, and we have been growing much faster than most of the peers in the industry. We expect at a combined level, we'll still be able to be close to 20% CAGR. I think what has happened also is since Blackstone has come in, there has been a lot of investments that they've been making in terms of infrastructure upgrade. So I think there's been a little bit of a delay in some of those investments paying off. But at a combined level, we expect that we should be able to do still a 18-20% revenue CAGR over the next couple of years.
Let's move on. And Adani Group Chairman Gautam Adani breaks his silence on his indictment by the US District Court on misrepresentation related to bribery in India, saying that no one from the Adani Group has been charged with any FCPA violation, and reaffirms the group's commitment to regulatory compliances. Listen in.
Fact is that despite a lot of the wasted reporting, no one from the Adani side has been charged with any violation of the FCPA or any conspiracy to obstruct justice. Yet, in today's world, negativity spreads faster than facts. And as we work through the legal process, I want to reconfirm our absolute commitment to world-class regulatory compliance.
Okay, on that note, we're going to slip into a very short break. And after the break, we'll talk about the GDP growth that is coming at a 7-quarter low and inflation remains persistent. What could the next course of action be for the RBI? We tell you more about that after the break.
my wishes are always there with CNBC. I think you have been really leading the economic growth in India. A lot happening, and a lot of youngsters look up to CNBC to all the insights that comes up. And of course, we advise, and my personal advice is not to again go against the day trading option. But I think CNBC is really, I would say, catalyst to India's growth as well. So I think for sure, I would wish the entire team at CNBC all the very best, and look forward to be here again in your Golden Jubilee celebrations, maybe.
Welcome back to Business Lunch on CNBC TV18. Let's move on. And the GDP print is coming at 5.4%, which was much lower than the consensus estimate. Now, this makes the RBI's meet on 6th of December very interesting. Now, will we see a repo rate cut or a CRR cut? Lata is joining with us with more details on that. Lata?
Yes, that's right. At 5.4%, it's such a shocker. It's that expectations are normal that the Reserve Bank has to do something. And that, its priority is inflation, keeping CPI at 4% plus or minus 2. But now growth also becomes a priority, maybe even a slightly higher priority. As it is, we know ministers like Piyush Goyal have been saying that a rate cut is called for. Now, what economists say is, how can a Reserve Bank whose mandate is 6% inflation do a rate cut when the last inflation number is 6.2? And for all you know, November also will be close to 6% CPI. It's hugely going against its own mandate. And so is there a chance that they will actually lose in liquidity? Repo rate is the price of money. Liquidity is the amount of money. So a CRR cut can increase the liquidity. Now, let me tell you what the impact on banks can be. Repo cut. If you cut the repo rate, then there can be a negative short-term impact on banks, because under new rules after 2012 or thereabouts, the interest rate, lending rate is linked to an external benchmark. It's called EBLR, external benchmark lending rate. So, home loans, corporate loans are all linked to either the repo or the T-bill, one of the external benchmarks. If you cut the repo rate, then all these loans will earn the banks less. But the cost of money, which is deposits, will go down slowly. So immediately, there will actually be a negative impact on bank margins. When liquidity is tight, a repo rate also is less effective. But importantly, for the banks, it is a short-term negative. Let us look at what happens in a CRR. What is the CRR? It is that part of your deposits which you cannot lend, which you have to keep idle as cash. At the moment, for every 100 rupees, 4.5 rupees CRR of 4.5% means 4.5 rupees cannot be lent. It has to be kept idle. But that money is being raised at 8% or something as an FD or whatever by the banks, but it's not earning anything. Suppose that comes down to, say, 4.25. Then a 0.2, now what is actually being released that you can lend? 0.25% of the total deposits in the system, which is 230 lakh crore. So 0.25% of that is something like 57,500 crores or thereabouts can be lent. It was earning 0, it will now earn something like 10%, 11%, depending on what loan you're giving. That means margins for every 0.25% cut in CRR can increase by about 2-3 basis points. If it's a 0.5% cut, then it can increase by 5 or 6 basis points margins. I mean, that's just blanket. Everybody's margins improve. Now, this is the first shot. Every time you give, a deposit has a multiplier. It's called the money multiplier. For instance, we get our salary from the company. It shifts from their deposit to our deposit. An additional CRR instead of 4.5 will become 4.5, 4.25 or 4. Then I pay my child's school fees. That goes to another deposit. Again, a further 4.5 has to be kept. No, now they have to keep only 4%. So there is that is called the multiplier effect. So the ultimate impact on banks over 6 months can be more. That's the basic thing. For banks, repo is slightly negative in the near term. CRR is positive in the near term and in the medium term.
Okay, thank you so much for that, Lata. But the RBI Monetary Policy Committee will be meeting later this week to decide and will have its hands full given that the growth and inflation concerns are there. Let's listen in to the CNBC TV18's monetary policy, what the poll comes in at, what are they believing in terms of RBI's next course of action.
Let me take the vote first. The first question I'm going to ask my panel is, what will the Reserve Bank do to interest rates on December 6th? Sajid,
we have a cut in February, so a hold in December.
Hold. Okay. Nothing, no action. Samiran? Soumya?
We are hold.
Okay, hold.
Very similar to Sajid, the hold now and cut in
Okay.
February.
None of you want a cut. Sonal?
25 basis point repo rate cut.
Okay, there you are. We have the first cut. And Dr. Sen?
Hold.
Hold. Okay, so this is 4:1 in favor of holding. Let me take the CRR question. Your thoughts, your vote.
Some liquidity management for sure, not necessarily CRR, but some liquidity management.
I'm taking
yes.
a no for CRR.
But some liquidity.
Okay.
Yeah.
Soumya?
I would paraphrase it saying that CRR should be used as a counter-cyclical tool.
No or yes?
Some, not headline CRR, but yes on some specific products.
Okay. Yes, I'm going with a yes for Soumya. Shamiran?
I think it is likely, it's possible to do.
Okay, I'll take it as likely then, which is more a yes than a no. Sonal?
Yes, CRR cut.
Okay. Dr. Sen?
No.
No. Okay,
Categorical.
so categorical no. Okay, then I'll take it as 2 no's and 3 yeses. So probably more of a chance of a CRR cut.
Okay, and the global opinion on India still remains positive. Adrian Schuster of UBS Global Wealth Management on the sidelines of CNBC TV18's Global Leadership Summit told Ashmit Kumar that India remains a bright spot in an otherwise volatile global market. Listen in.
I was really impressed how bullish all these leaders are on the investment opportunities, and I also has joined basically an investor conference with a lot of international investors, and they're really willing to allocate more assets to India. And we see it the same way. It's one of the best structural stories that we can see. Strong growth, lots of opportunities, big population, basically, lots of consumers, but also a lot of innovation that is coming out, and it basically shows the development of India that has been seen over the last 25 years. The first cut, the timing is probably the question, and we actually think it will come. It definitely comes in the first quarter, maybe January, February, around this part. Yes, it's probably time that also global interest rates are going lower. The Federal Reserve is cutting interest rates. So there's a lot of leeway basically for the central banks to stimulate a little bit more, bring growth back on track. And I think India can grow double digit, 10%, and therefore supporting that with lower interest rates, that probably would be an opportunity.
Okay, on that note, we're going to slip into a very short break. After the break, we'll get you the latest updates on the appointment of the Chief Minister in Maharashtra, so stay tuned in. Welcome back to Business Lunch on CNBC TV18, and now getting you some political news. Developments coming in from Maharashtra. The swearing-in ceremony of the Maharashtra Chief Minister will take place on 5th of December. There is no formal announcement yet on who the Chief Minister is likely to be, but the key Mahayuti leaders will meet today to discuss the portfolios. Okay, and with that, it's a wrap on this edition of Business Lunch on CNBC TV18. Thank you so much for tuning in. Don't go anywhere. Midcap Radar up next.